today I wanted to continue to talk about income and where does your income go, and talk a little bit about taxation. So I try to prepare some props, so bear with me because it's my first time trying to do a graph and I don't know how it's going to come through. So I might have to talk through it. But basically, what I want to focus on today is try to break down for people kind of how people think about income earning and where does the income actually go, or before it hits your pocket, right? And so I like to use round numbers just to illustrate and just walk through it. And I think some people often get a pay stub and they're just going to gloss over it. They really just know like what the bottom line is, like how much money goes into the bank account, but they don't really question the path in between. So I think sometimes people kind of accept certain salaries or certain wages, or whether if you're a freelancer, a certain amount of money, and then you don't realize the impact that the taxation will have on your take home. And I think that, I just want to focus on 2 or 3 areas, how income can be different between I put 4 main buckets. So majority of people are W-2 employees, and again, I think that it just I think if they understand kind of what the various pieces are, if they ever make a transition, right? For people, this is really like when people make transition between a W-2 employee to a freelancer to maybe a shareholder or a business owner, and maybe they advance to capital gains. I think it's important to know like what is $100,000 in gains, in earnings that'll bring it to you, right? And so one of the areas is payroll taxes. So payroll taxes are the most important when people go from being a W-2 employee to being a freelancer. So when you're a W-2 employee, the pie chart is actually a little bit bigger than what you see. So there are 2 main components that your employer picks up, which are the half of the payroll taxes. You only pay half of them out of your paycheck, and then a healthcare contribution. Most people see that as a benefit of working a stable job. Besides like getting paid regularly, being able to take sick time, vacation time, etc. But financially speaking, those are 2 big pieces that if you do go into contracting, you have to kind of add that in to your total compensation. So let's say if you have a $100,000 salary, you probably need to add $20,000 worth of benefits, just those two areas, because the percentages do matter. And payroll taxes are not something that's deductible, and so you need to know what that burden is going to be. So your take home is going to be less because you're going to, if you just said, okay, you know what, I have a $100,000 job. What I'm going to do is get $100,000 freelancing contracts over the year, and that's going to be adequate. And it's not. You're going to end up with less money in your pocket, even if you do take deductions and everything like that. You just need to be aware of that. The thing that I want to talk about, though, is what happens when you start making money off your money. And I think that's really the big shift is when you have dividend income, to know that like even if you own a business, like a small business, part of your profit can be distributed to as dividend income. And that's basically income that's not subject to payroll taxes. So poof, like all of a sudden, that's like nearly 15% better gains, because that's how much you would pay on payroll taxes. So then you just, you're paying a different a different set of taxes. It's still taxed at your tax rate, and the state tax rate, but you've saved those payroll income. So someone can bring in that level of dividend income that's actually gives them more money in their pocket. And then finally, I want to talk about capital gains income, which again, that's from selling assets over time. And long term in the US is over a year. So if you hold your assets over a year and you sell them at a gain, again, that $100,000 income, and those laws have changed over time as well. And so the gain rate also changes, but it impacts your ability to have a take home. So the $100,000 in capital gains would be different. So those are the various things, and I think that people just take it for granted and don't really spend much time thinking about it, and they don't realize that dividend income and capital gains income, you need less in total to make to have the same take home that you do off of a salary or contracting. So that's it. Hello to Russian friend. So that's just something I want you guys to think about as you think about income, and do the numbers. Like what I always think is, I see the percentages, and percentages aren't as easy to compare as actual numbers. So always do the math and follow through and figure out what the percentages are really worth in dollars, and that'll really help you figure out where you're at. So thanks for joining today, and if you're new or if you're replaying and you want to follow, just swipe right on Apple or app on Android, and I do a daily 10 a.m. broadcast to talk about money habits and money management and money concepts. So Chicago's great. Thank you. Thanks for joining. Goodbye.